You've been in crypto for a little while now. You've probably made some gains and you might have wondered, when is the best time to take profits? When should I take my money out? Like if I made 1,000% return, when should I take that profit? Should I wait? What if I'm missing out on gains? In this video, I'm going to be discussing exactly that. Hello and welcome to another video. My name is The Shiminator. And in this video, I'm going to discuss when you should pull out. In general, I try to take a holistic approach to this question. You want to make the most amount of money that you can long term, meaning it's not so good to make $10 million right now if you're going to lose all of it tomorrow. So the answer has to include making the most amount of money over a long period of time. Obviously, being rich now is fun, but if you're going to lose it all tomorrow because of the wrong approach or the wrong strategy, that's not going to help you. You're going to be back at zero. You want to pull out money in a way that makes you profits without losing potential gains. I'm going to mention 3 strategies that you can use, and this will really help you maximize your crypto gains. Keep in mind though that if you watch the entire video, even if it's not necessarily so exciting every moment, it really does help me. It makes YouTube recommend my content and it helps my overall retention so that YouTube doesn't just throw my videos away and nobody sees them. So I'd really appreciate it if you could like this video, subscribe, and now let's get into these awesome strategies. The first strategy includes taking profits at percentages. This means that let's say, for example, you put in $1,000 into a cryptocurrency and that cryptocurrency rises by a certain amount of percentage points that you predetermine. At that point, you sell your crypto, or at least portions of your crypto. You take profits slowly as the market moves. So let's say, for example, the market rises by 20% and you predetermine that 20% is the mark where you start to sell. You may sell 10% of your portfolio at 20% gains. Then if the market drops a certain level, you may buy back in. This type of strategy is effective because you won't be bothered by dollar value of the crypto you're losing or gaining, and instead you predetermine that, for example, when the market raises 10%, I sell off a portion, and when it drops 10%, I buy a portion. This keeps it super simple, you make some decent gains, and you won't necessarily miss out on anything because you're gonna gain money when the market goes up, and you're gonna buy in dips when the market goes down. I actually only use this strategy for one crypto, and that's Bitcoin. I have a separate wallet that I buy and sell Bitcoin on just to increase the amount of Satoshis I have on there, and again, I sell Bitcoin when it raises about 15 to 20%, and then when it drops heavily, I buy dips based on that. This helps me basically increase the amount of Satoshis I get over time without really having to stress about it, and the primary portfolio that I have doesn't really move at all. This strategy is pretty awesome because you get to take advantage of both a bull market and a bear market. During the bull market, you take profits and you make some money. During a bear market, you get to buy in so that when the bull market comes, you can make more profits. This is really cool and it's a very simple strategy, especially if you keep to it and you don't really stress about dollar amounts. Doesn't matter how much Bitcoin is right now, it just matters the percentages. Using percentages makes it easy and you can just take some profits. Now, this is not my favorite strategy because you have to worry about taxes, and of course, I like to buy in rather than constantly trying to manage it. But this strategy can be quite effective for taking profits, especially with a crypto that might rise 50% because you're early. That way you know, okay, it rose 20%, I sold off. It rose 20% again, I sold off. And that way when it drops again, you buy more and you can just keep doing this cycle. Again, it's risky, but it's also less risky because crypto is so volatile. And especially if you're smart about it, you really could make some decent profits. The next strategy assumes that you believe heavily in a crypto. And this is basically just buying the dips. This, of course, means you won't really be taking profits unless it goes parabolic. For example, under this strategy, you'd only sell at a 50% gain or 50% loss, and of course, you just constantly try to buy the dips. Under this strategy, you basically never sell, you're just trying to focus on buying as much as possible, accumulating either Satoshis or whatever cryptocurrency we're talking about, because in this case, you're hoping that over the course of the next 10 or 15 years, it's like being very early on Apple or Google. Basically, you're in on a new crypto, this crypto has a ton of potential, and when it ends up being an enormous market cap, you're going to be filthy rich. So the strategy on this is basically just buying the dips and not worrying at all about trying to take profits. You won't have to worry about taxes. You'll be constantly accumulating that crypto, and over time, the hope is that you'll be filthy rich. Now we have my favorite, which is a passive income strategy. Now this strategy basically means that instead of buying and selling and worrying about when to buy and sell, you buy cryptos that you can make passive income on. For example, most of my Bitcoin is earning interest on Celsius. A lot of my Ethereum is staking on the blockchain Ethereum too. A lot of my Cardano and a lot of my Solana is earning staking interest on Kraken. Basically, the goal is to make a ton of passive income from the crypto. You're earning more of that crypto over time, and you're never worried about when to sell. This basically means that you're accumulating more of that crypto for itself, basically like mining, which is really what staking is. It's the alternative to mining, and you never really have to worry about it anymore. For example, in 5 years, I'll earn a ton of staking rewards, my crypto assets will mature, and I'll never really have to worry about buying, selling, drops, market, bulls. All that's completely and utterly not necessary. I never really have to worry about it because I did proper research. I'm solid, I'm comfortable with the cryptos that I bought, and I'm earning great passive income. So that passive income basically builds itself, and eventually I could even take out that passive income without having to even touch the underlying asset. Ultimately, if you're interested in selling off, if you're interested in taking profits, you may want to learn some technical analysis. Technical analysis means basically reading the charts, reading the daily fluctuations, and trying to find a good spot to sell, especially if you're going to be using the first and second strategy, but especially the first, really. On the other hand, if you're like me and you want to earn staking rewards and you want to be able to buy and hold and not really have to worry about it, stress-free completely, you might want to learn a little more fundamental type of analysis. I even have a video on how you can do your own research on cryptocurrency on my channel, so you can check that out if you want. I'm going to have a new one coming out as well pretty soon. But essentially, the last strategy is much more comfortable. You're going to earn passive income, you're going to make back a lot of the crypto for free, and basically you're not going to have to worry at all because you're holding for the next 5 or 10 years. You're making that passive income. You will have to pay a little bit of taxes over time on that, especially if you pull out. But taxes aren't crazy because you can even use your exchange to basically get the tax form. You just give it to your tax person or you just put it in your own taxes. Pretty self-explanatory. And earning passive income on crypto, to me, makes the most sense. That way I really don't have to worry about the bull markets or the bear markets. I mean, I do worry about it for other reasons, but for my own crypto, I really don't have to pay too much attention. And I certainly never have to freak out about whether something's happening or not happening or whether there's any good opportunities. I just buy the dip, I stake it, and I never have to worry again. That's my personal favorite, and that's the strategy I use most often. But of course, the first one works really well if you want to try to increase your Satoshis or increase your other cryptos without necessarily having to put in extra capital. Less than 1% of you are subscribed. So imagine what you could do if you click subscribe, and if even 1% of you click subscribe, that would double my subscriber count. And it only takes a second, you can change your mind later. And my video takes like 35 to 40 hours to make, so 1 second like or subscribe would really help. So do me a solid, click that button. Thank you so much for watching and have a wonderful day.